Hello guys and welcome back to episode 2 of Compound Interest Invest, and we are coming to you live from New York City.
Welcome to our podcast, Compound Interest Invest. It's important to understand that our podcast is for entertainment purposes only. Therefore, any opinions that you hear from myself, Tyler, or any of our featured guests is not financial advice. If you wish to invest in any of the assets that are discussed on our podcast, then please do your own due diligence before doing so. We hope you enjoy the show.
Max, how are we doing?
Very good, thank you, mate. Glad to be here. It's been, 2 days since we've landed here? Your first time. What are your thoughts so far of this beautiful city?
First of all, feeling the jet lag a little bit, but as we always do, you've got to power through it. New York, what an amazing place. It really is a city that never sleeps.
It was amazing.
I had high hopes and high aspirations for it when I came here initially, and it's trumped those by a long mile. Well,
we've still got a long time to go. I think, where did we go out last night? What was the name of that bar?
The Williamsburg Hotel.
What a place. What a place. For those who've never been there, I definitely recommend that you do go there when you come on holiday to New York. What it is basically a water tank on top of a hotel that's been renovated, and they've basically panelled it all out with glass, haven't they? And it's like a nightclub, but within the club you have 3 different clubs or 3 different DJs, isn't it? So
and you forgot to mention the pool right in the middle.
And the pool right in the middle, naughty little pool.
No, it's fantastic. And obviously we started off the night by a nice waterfront dinner under Brooklyn Bridge.
Nice Italian meal, yeah. Beautiful.
We started off well.
Yeah, really good.
The trip's only going to get better, right?
Exactly. I hope so. The weather, it's scorching here as well. I think it's like 30 degrees. So, daily we're walking like 20 to 25,000 steps. So we've had a lot of Starbucks. I think I've had to remortgage the house now, the amount of Starbucks that I've had to buy. But let's talk about Wall Street. Yesterday we went to Wall Street for the very first time. Did it meet your expectations? What did you think?
It's always been a childhood dream for me, Wall Street. And yeah, I'm so glad I've experienced it. Wow. It's always good to come away, even when, you're so used to routine being back home in the UK for us, doing your Monday to Friday, your mundane things. It's always great to come and travel to a new location anyway, just to get a little bit of perspective, bit of motivation again, recharge the batteries. I think it always helps me when I go back home. And even when I'm in a little bit of a place where I'm just bored of everyday life. So to come to New York, fulfill a childhood dream like that, Wall Street's amazing. Just the buzz you get around it, the heart and the beat of the city, the traders, the bankers. It's just a great feeling.
Yeah, it's crazy. And also, like someone like myself and you, we watch obviously CNBC every single day, and obviously being in Times Square outside the NASDAQ building, we got to see where they film, their studio basically. And it's strange, right? Obviously, we're so used to seeing it on the TV screen, and then when you're here and you see it in the flesh,
yeah,
it's kind of, it is very weird. And likewise for Wall Street, you don't really think about all that. I think it's over $1 trillion a day gets exchanged in stocks there. You
crazy numbers.
When you stood outside it, you wouldn't actually think that. But it's crazy. But I think we went there on a Saturday, didn't we? So the markets were shut. It was a little bit quiet outside. So really excited to take you there on Monday.
But it'd be nice to get the contrast of the two. Quiet on the weekend, and then obviously buzzing during the week also. But I know it's not your first time to Wall Street. Do you still get that same feeling every time you go?
I do. I mean, it's different. Like when I've previously been here, the first time I come to New York City, I was about 18 years old, and I was actually come by myself. So it was very strange going there by myself. And obviously the second time I come was at Christmas time. I was here with my parents and my girlfriend, who basically don't care about stock market at all. So it wasn't, I didn't really share the same experience. But it was really good going with someone like yourself, who's passionate about trading and stuff. Yeah, so
I think I'm just going to stop you there, because you've got quite an interesting story, which I think you should tell the viewers as well. For me, when I did my work experience when I was back in school, I just went out with my dad for a week. My dad's a boiler engineer, so in people's houses, fixing boilers, etc. I know you did something really different and really cool. I think you should explain to the guys what that was.
Yeah, no, I was very lucky actually. I think as I mentioned, I was 18 years old. And we had a one week of work experience, and my old teacher, Mr. Worth, he was my business teacher. I basically approached him and I said, Mr. Worth, I could easily go out and do, a marketing work experience for a week, or, go and work in sales or something, but I know what I want to do, and that's investing, that's trading, So I think it would be a lot more beneficial for someone like myself to actually just go to New York City and basically not work. I know it sounds a bit crazy on work experience not working, but I said, it would be so much more beneficial for me to go to Wall Street, do a tour, get to know how it really works, etc. And, he let me do it, and, credit to him. Yeah. It really did, basically drive me even more to become a trader, etc. So yeah, I thought that was a very good story. I know not all teachers will probably have the same outlook as Mr. Worth did for myself. But if you are a teacher watching this, maybe, take advice from old Mr. Worth, because it really did help me. And look where I am now. So
Trump's to letting you do that. I'm sure it's had a lot of substance for you to keep going and get to you are now. I know it's a long journey since you first visited Wall Street. So no, hats off to him for letting you do that.
Yeah,
I admire it a lot, to be honest with you.
100%. Right, before we get into the technicals of the podcast, I want to hear from you. One pro and one con of New York City so far. What do you like and what do you not like about the city? Because obviously it's very different to back home, back in London. The way of life is very different. The prices are very different. Do you have a pro? Do you have a con? What do you like? What do you not like?
My first con when I first got here was start of a negative. It was the tipping.
Oh no, it is very different, isn't it?
I'm not used to that back home. We pay for it. We might give a little bit of a cash tip here and there if you feel like you've got really exceptional service. But yeah, it's not really a common thing back in the UK anyway. So to come here, you pay for your food or your meal, your drinks. Then there's a little bit of tax on top, but you don't always notice and know it's going to be there.
That's strange as well, isn't it? Because obviously you go into a shop. For those who haven't been to the US yet, you'll go to the shop and you might order something that says it's like $10 on the menu, but then when you go to pay, the waitress will be like, oh yeah, that's $12.50. You're like, well, where did the other $2.50 come from? And that's because here in the US, they don't include the tax. Well, I think in New York anyway, I'm not sure about other states. Yeah. But yeah, it does take some getting used to, doesn't it?
It does. And obviously, tipping is a very big thing for them. I was under the impression that their wage was paid by the restaurant, the bar, wherever they might work. They might get minimum wage, like back in the UK, it's £9.50 an hour. Most restaurants, most bars here, they don't even pay their staff a minimum wage. Their income is solely from tips.
Yeah.
So after realising that, I thought, you know what, maybe if you do feel like you've got service, leave a tip. And if you don't leave a tip, it's very frowned upon here, which at first I didn't realise that was the case. And now that you know that is their sole income, it makes you want to be a little bit more generous.
Yeah, no, of course. So it's good to give.
If you come into the States, that's a tip. Make sure that is a tip. Make sure you tip.
And also 20%. Not less
is the standard. Really,
we're not talking about a 5% tip. No. That's something that back home in UK. What's the standard tip? 10 to 12%. Mm-hmm. Then here, obviously, it's 20%. But now that we've got the negative out of the way, let's hear the positive.
The positive, I'm going to keep that one nice and simple. It's just the energy that New York has.
Yeah,
there's so much going on. There's so many different people from so many different walks of life. You step out the hotel, and something's going on. Yeah. You look to your left, look to your right. There's always something that's catching your eye. There's that constant flow of energy, that buzz, which I really like. Some people don't like city life. They like the relaxedness of being in the countryside or somewhere like that. But for me, the energy's definitely grabbed hold of me, and what I like about New York is a positive.
I couldn't agree anymore. And I think for those who don't know, we're just staying in a hotel just off Times Square. And I think that's why they called it the city that doesn't sleep, right? It is just constant. It's 24 hours. You can hear it outside a bedroom window, can't we?
And that's why there's so many coffee places on every corner, because they need the caffeine to keep them going.
Yeah, they're all wired, aren't they, on coffee.
Right, let's talk about, obviously since we've done the first podcast, there's been quite a change in sentiment in the market, I think. Markets have rallied pretty well. Not of much substance at all, but, the markets are looking a little bit healthier as of today.
Yeah, no, definitely.
What's your thoughts on it?
Yeah, I know. Since we did our last podcast, I think the markets have had a nice little rally. I think the S&P 500 is up just shy of 10%, up around 9%. Likewise for the Nasdaq 100. But as you mentioned, what are the reasons for this rally? And I don't really see any fundamental reasons. I kind of just put it more down to the technicals, which is we were starting to become a little bit oversold. But the big question is this a bear market rally, or are we starting to build something here which we can, hopefully...
Having a fat bottomed.
Yeah, have we, is this a temporary bottom or is this the bottom? I think that's the big question. That's what many investors are wondering here. And I'm going to pull up a graph, actually. If you're watching this or listening to this podcast on YouTube, you'll be able to see the graph now. But this is a very similar bear market to what we are trading in right now. This was back in 1929 to 1932. And as you can see, during this bear market, on 6 different occasions, we had a bear market rally where we pretty much rallied approximately 20% on each occasion. And if we look at the current chart setup for right now for the Nasdaq 100 or the S&P 500, we've only really had two decent bear market rally. So personally speaking, I wouldn't be surprised if this is just another bear market rally and we do roll over. What do you think?
Look, nothing that we say is financial advice. We're not financial advisors, and obviously always do your own research, but it doesn't feel like a bottom to me at all.
Yeah.
Relating to crypto, and obviously crypto and stocks are very, very correlated at the moment for sure, especially obviously the indices, the S&P 500, the Nasdaq, the Dow Jones, they kind of move to somewhat in tandem. If the indices are up, crypto's up. If they're down, they're down. Bitcoin did something which it did for its first time in history. This was on the weekly candle close, the week just gone now. And it actually closed below its 200-day moving average. So for Bitcoin to do that within its first time since its incorporation is a very, very unprecedented thing that it's done. So there's no market data there to really show what happens next. But every time Bitcoin has held its 200-day moving average in the past, it has marked a bottom for crypto in that cycle. So that was a big warning flag for me to see that happen.
Yeah, I think that again, that's where you're very blessed as a equity investor, is that we have so much history to kind of look back on. We've got the charts that take us back to the 1920s, where obviously with cryptocurrencies, it's quite new. It only really goes back to 2010, 2011, really.
Really.
And that's when Bitcoin was trading pretty much under $1. So it's very hard to kind of navigate because, typically speaking, as a investor, as a analyst, you'd look back and just see, what's happened in previous bear markets. As I just mentioned with that chart I just showed you from a 1929 to the 1932 bear market, we had 6 individual bear market rallies of approximately 20%. Obviously, with cryptocurrencies, you don't really have that to kind of look back on, so it's a lot harder to navigate. But the one thing that I would say is very positive, and something that many crypto investors may be looking to at this moment in time, is that crypto is extremely correlated with the Nasdaq 100 at this moment in time. So if the Nasdaq 100 has a good rally, well, then the cryptocurrencies typically follow it. So
they always do. And with Bitcoin as well, it's you always have to look to Bitcoin as kind of like the dad almost. It's the staple coin within the market that basically dictates all of the altcoins, and they move somewhat in tandem, So we always look to Bitcoin to kind of give us an indication on where it has, and making that statement that it has done, it does make me feel like we've got a lot lower to go. So if you look at Bitcoin technically, from a basic Elliott wave structure, it's in a 5-wave move to the upside. Now that it has broken underneath its 200-day moving average and it's yet to get back above it since, I really want Bitcoin to see for it to hold its wave one. Wave 1 top. So, for it to remain a valid structure, wave 4, which it's currently in, must never breach the top of wave 1, that crucial level being 13,174. So I wouldn't even want to see a minute candle wick down below that level, because that would really, cause some problems for Bitcoin. A lot of investors, a lot of traders would be scratching their head at that point.
Yeah, no, of course. And I think, going back to the bear market, is this a bear market rally, or is this actually something that we can potentially build on going forward? I think one dilemma that there is for many investors at this moment in time is that for the next 2 weeks, we're in no man's land. We don't really have any data that can guide us. I know we have earnings seasons that's going to kick off on the 14th of next month. And then apart from that, I think we have some CPI data, which is in about 3 weeks' time, 2 weeks' time. So until then, we don't really have any data that's going to potentially help us continue this rally towards the upside. And with the state of the market, with the way it's been trading over the past 4 months, I don't feel very confident that it's going to be able to hold these gains. I think it's going to be a very similar situation as to what happened last month, where we had that nice 2-week pop, and then we completely folded over and we went and created fresh lows. And if we look at the Nasdaq 100 and the S&P 500 and the crypto markets like Bitcoin, XRP, for example, we continue to create new fresh lows. Lower lows, lower highs, etc. So we are still in a broad market bear downtrend.
And from a fundamental perspective, I feel that the markets and the sentiment around it is very data dependent. The markets move and they're very volatile depending on what data comes out and how it relates into the forecast. So just that alone gives me a strong belief that people are just waiting to see what that next piece of data is going to be, to see whether should they invest more, should they sell, should they buy, should they not. But obviously you mentioned earnings are coming up. What's your view and your general idea for the earnings that are up and coming?
That's a very good question. And again, I am bearish. I think I mentioned this in my last podcast. I don't think that the lows are in yet. I listen to the likes of CNBC News or Bloomberg News, and I haven't heard really one analyst who's come out and actually sounded very, very bullish, probably apart from Tom Lee actually. But most analysts out there are sounding very, very bearish. And the reason being is because, like you mentioned, on the 14th of July, we're having earnings season, and these companies are going to come out, and you're already starting to hear news reports of them, basically laying off 9 or 10% of their staff. And I think that the guidance going forward, I think that's what investors are going to be really looking at. And I think that the guidance going forward is going to be weak. And then ask another question: how's the market going to react to this news? And typically, the market would tell you, or the history of the market would tell you, that this is going to be bearish. So I think we are going to be trading in no man's land up until the 14th of next month. So we've got another 3 weeks pretty much. And then when we do get, we do start to hear from the banks, a bit of the tech firms, etc. I think that the guidance is going to be weak, and it may send us to fresher lows. I think the Nasdaq 100 could easily break below 11,000. I think the S&P 500 is going to go to 3,500. Obviously, for the crypto market, I'm not as confident, and I don't really know much about VIA numbers. But what are your thoughts with Bitcoin? Do you think that it's going to get dragged down by the Nasdaq 100? Let's say if my prediction here is correct, and we see the Nasdaq 100 go down. As I mentioned before, the correlation between the Nasdaq 100 and Bitcoin has been so strong as of recent. Do you think that we've got fresher lows to come for Bitcoin and XRP?
My gut feel at the moment, we are definitely in some kind of a bull trap. I think this little bit of a relief that we've had over the last week or so, or since we did the previous podcast, you've seen that slight shift in sentiment, just from a short-term rally off nothing really. So it's definitely a time to be cautious. If you are wanting to get into the market and you are wanting to invest, don't go all in. Dollar cost average. Just buy at comfortable levels, Allow yourself for another 3% to 5% drop. Sometimes even another 10% drop when it comes to crypto. So just don't go all in. Sit in some cash, leave some reserves. I think the bottom is close, but I just don't think we're there yet. Like I said, back with Bitcoin making that statement of closing under the 200-day moving average, I think that's just basically the writing's on the wall. It's saying, I'm going to go lower here. We could go back down to those 13,000 level that I spoke about, where the top of wave one is. And I think, if you look at XRP, I think XRP could go back down to maybe about 20-25 cents before we really start heading higher. And I think we've yet to really still see any strong capitulation in the markets too. So once we see that strong buying volume at a bottom, that's when I think we're ready to say, right, let's start moving higher now, and the next bull market, so to speak, is ready.
Yeah, that's definitely one sign. I have been studying over the past weeks, what typically marks the bottom in the market. And one thing that I really like to do is listen to the Wall Street veterans, those who've had 40, 50 years experience in Wall Street, trading for a hedge fund or on the trading floor or for banks. And a lot of them say that, you need that day where the VIX spikes above 40, meaning that there's a lot of fear in the market. We see, an incredible amount of selling pressure, and every single one of them has come out over the past month or so and said, we still haven't had that day. We haven't had that day where, investors really get worried, really get scared. So, if we were to have that day, well, even after this week's rally, I think the Nasdaq 100 could easily break below 11,000, and the S&P 500 could easily go and test 3,500. And there's even analysts out there calling for it, the S&P 500 to go, down to 3,000, which is pretty much near the pre-pandemic level. So,
and that's why it feels like a bull trap. We've rallied off nothing. Sentiment is still fairly low. And there's not been that strong capitulation yet.
Yeah, I think as a trader, personally, I think that we could potentially have another 2 to 3% to move higher. I wouldn't be surprised. I know that the futures have just opened now, but I wouldn't be surprised if the market does go up another 2 to 3%, because the S&P 500 isn't quite yet at its 50-day EMA. The Nasdaq 100 either. Again, we've got another 3% to go until we hit those levels. But I really believe that the 50-day EMA is going to offer, a temporary roof in the market, and I would fully expect us to be rejected from that area.
And my advice would be at the moment is, look for markets to move a little bit lower, maybe some fresh lows, and then wait for a key piece of data to come out, something like, your CPI data, your consumer data, etc., etc. Look for a really good beat, a matching forecast or lower. And I think that's going to be a big statement moving forward for the markets to go, okay, well, we're ready to move ahead now. The worst is gone.
Yeah.
Let's move on to better times. But sentiment's always a great judgment as well as to where we are in the markets. How do you kind of gauge sentiment and whether we're at a top or a bottom?
I think it's fearful still. As I mentioned, watching CNBC, watching Bloomberg News, analysts out there, and I'm talking about, professional traders, they're very worried at this moment in time. They still don't believe that the bottom's in. And again, I have to put this down to there's just so much uncertainty out there right now. If you read any financial textbook, if you study finance when you're at university, for example, one thing that you're always taught is that traders like certainty. And at this moment in time, with a hawkish Fed, we don't know how hawkish the Fed is going to continue to be as we go into next year. When and where is the Fed going to stop hiking interest rates? And until we get that answer, I think the markets will continue to be bearish.
And Max, do you think the recession fears are still really, really lingering around the market?
Yeah, well, I think it was this week in the news we heard from Mr. James Gordon, the CEO of Morgan Stanley, and he's basically put a 50-50 odds now, increasing it from 30% chance that we do enter into a recession. So, again, you're starting to see people come out, analysts, and they are, starting to become very, very worried. And I would be very, very surprised if the market bottom is in with this type of news that we are getting in the markets. And again, you're seeing so many companies coming out, cutting their workforce. We had Tesla this week as well, saying that they're going to have to cut, I think it was 3% of their workforce. Nvidia a few weeks ago, they come out, but they're going to be cutting about 10% of their workforce. So, I think that we still do have difficult times.
We had some news from Coinbase actually. They're cutting
Coinbase was
17 or 18% of their workforce to prepare for a bad crypto winter.
Crypto winter, yeah, exactly. So sorry, I forgot that one. But these are not bullish signs. These are signs that companies are forecasting difficult times, and they're now taking action basically.
Yeah, and also it's a great way to look at companies that have financially prepared themselves for a bad economy, a bad stock market, bad conditions. Look at those ones that aren't making cuts, that are still maintaining good profit margin, and so forth. And those ones are very stable. They're very strong companies, and a great place to put your money. You might not get a return in the next 2 to 3 months, but a year down the line, maybe 2 years, there are the companies that are gonna hold well and pay dividends moving forward.
It's very tricky at this moment in time. You hear many analysts come onto news channels and say, this is a trader's market. This is a trader's market, and that's because we've had such high amounts of volatility. It's very normal this year to see a 2% daily swing in either the S&P 500 or the Nasdaq 100, where in normal times that's not the case. You're lucky to see a 0.5% move in either direction. So, the big question, is this actually a day trader's market, or is this starting to become more of a investor's market? And you could argue that investing in the short term probably isn't the best option, but I think if your time horizon is 2 to 3 years from now, there are some fantastic opportunities out there right now. There are some of the top companies in the world. Apple's down over 30% off its all-time high. Microsoft is down over 30%. We have Nvidia, which is down 50%. So if you bought Nvidia right now and you traded it back to its all-time highs, it's like 116% gain.
Crazy.
Back up to $346 a share. Nvidia is going to be I personally believe that it's going to be one of those companies. It could even be the next Apple with the way that the world's going with the metaverse, etc. I think chip stocks, even like AMD, for crying out loud, 50% off its all-time high. These are fantastic companies. They're selling great products, and they've got good balance sheets, and they've got good growth prospects as well. So I am really, really bullish at this moment in time, longer term, because obviously that's what I think we were talking about yesterday at a bar. One of the best things for us is that we are young. We shouldn't really be worried about where the market's going to be next year. We've got years ahead of us.
It's a long game always.
Yeah, exactly.
And that's the frustrating thing with clients I've especially spoken with over the last month or so that are reaching out to me, new or clients that I've worked with in the past that are like, I'm ready to come back into the market or thinking about it, but sentiment's so bad right now. Markets are down really, really low. I'm scared. I'm fearful. I don't want to put my money in the market and lose another 10 to 20% on it. it, but these are the best times to get involved. It is the most frustrating thing, because when sentiment is great at the top, you've got all your news and media outlets saying, fantastic things are going to go on forever. I know when Bitcoin was at its top of 69k, everyone was screaming for $100,000, $150,000 Bitcoin, and look where we are now. 6 months later.
Exactly.
So don't buy at tops when the sentiment is fantastic. Buy at bottoms when the sentiment is horrendous, when there's blood, when there's fear, when there's depression in the markets. That is a time you should seriously be thinking about, right, I'm going to invest now. I'm going to get in good assets, good stocks, good cryptos, good coins, and really maximize and get great potential out of my money in the next 2 to 3 years.
Exactly. I think, it's very important as well for a investor who's wanting to buy stocks, let's say come Monday. It's important to understand that, could your investment go down 10% within the next month or two? The answer is probably yes, it could. Could it go down 20%, another 20%? And the answer is probably yeah, it could. Mm-hmm. But, as I just mentioned, some of the top companies in the world, they're 50% off their all-time highs. And, I am a believer that we will go and trade back up to those all-time highs. Is it going to happen next week? Probably not. Is it going to happen next month? Probably not. Will it be happening this time next year? Who knows? But I think in 2, 3, 4, 5 years, in 3 to 4, 5 years time, I think that there's a very high chance that these companies will be trading back near or at or even above their all-time highs. So, as we were just talking about, I think that right now is a fantastic opportunity to be a long-term investor, especially if you're young. If you're someone who's 65 years old and you put all of your pension, all of your life savings in XRP, for example, and it's down 80, 90% from its all-time high, of course, that's a completely different situation. But, people like ourselves...
Your risk appetite is always going to be stronger when you're younger in life. You've got less responsibilities.
Exactly.
And there's less for you personally in your personal life to risk on the table. So, you're happy to take them big jumps, them big leaps of faith, and hopefully it works out well. And that depends whether you've done your due diligence, right? Yeah,
no, exactly. It's all about taking risks. But, quite frankly, crossing a road is a risk. And I think, right now is a fantastic opportunity to take that.
All you've got to do is pull up an indices chart. All you have to do is pull up the S&P 500, the NASDAQ, the Dow Jones, even Bitcoin. Put it on the 1 week time frame. Zoom out as much as you can, and you'll just see a nice
gradual rally towards the
rising
upside.
Up. Exactly. And obviously, there's going to be tiny little dips within those 20% dips, 30% dips, but they are buying opportunities. And markets won't always go up. There's going to be some volatility. They are going to have moments where they go down, but they are simply buying opportunities. Indices are designed to always go up.
Yeah.
It's just a matter of time,
because you have the most successful companies rotating out with the companies that have been a slack. And it's like Tesla, when Tesla got put into the S&P 500, it's always a company that's not doing so great that obviously gets her taken out. But I think you're right.
And for those that don't know, Max is a very, very good technical and fundamental trader of oil. I'll give you that much.
Crude oil.
And we was having a really good conversation last night when we was out about some moves recently that crude oil's made, and how it's kind of giving you a certain bias on the market moving forward.
Yeah, I mean, what a week it's been for crude oil traders. That's if you're bearish, of course. I think the market was down 15% this past week. It's gone from $116 to $120 a barrel. I'm not quite sure where it was trading that last Monday, but roughly around that area. And, we went and tested $101 a barrel this week. So a massive 15% correction in the market. I don't think investors were really anticipating it. But I think it's clear from a technical point of view at this moment in time, it is creating a wedge. And, if you're listening to this podcast right now, I definitely advise you to pull up a chart and go on the daily candlestick time frame, and you will see a clear wedge. And we've bounced very nicely at $104 a barrel. And again, with the NASDAQ 100 and the S&P 500 starting to have a nice rally, I think that crude oil is now ready to bounce. And of course, that's then going to spark more inflation fears. So, of course, with the CPI reading that we had last month, crude oil had that nice rally up to $120 a barrel. And I think crude oil contributes 20% to the CPI reading. So with crude oil being very high, that of course creates a lot of inflation. And with crude oil basically coming down 15% this week, a lot of investors have started to get very bullish on the stock market, because they are basically thinking now that the CPI reading next month is going to be a lot weaker than expected. But I think that crude oil is due a bounce. I think that we do go up to $120 a barrel again. The fundamentals haven't changed. We've declined 15% on what? Nothing.
Exactly.
If anything, the war in Russia is getting even worse. I was reading the news this morning. There's been fresh hits, and even if, let's say, Putin had a complete change of mind and he come out tomorrow and said, I'm really sorry for what I've done. We're going to stop. We're going to help rebuild Russia. Don't think that the US are going to, the US, the UK, and Europe and other nations around the world are going to say, okay, we accept your apology. We're going to start buying your crude oil again. I don't think that's going to be the case. I think this punishment, these restrictions on buying crude oil from Russia are going to be long term.
Yeah. That I think a lot of countries have realised maybe it's going to be a positive moving forward that they can be less dependent upon Russian oil. But they've got to go through certain market conditions and situations like this. Obviously nobody wants for a war ever.
Yeah.
But hopefully it's gonna bring a bit more peace and harmony over the next few years. But I don't get into politics too much. It's not my game and not my area of expertise. But
well, me either. But I think the reason that we are in such trouble at this moment in time is because there's a lot of pressure for presidents of certain countries to basically be eco-friendly, and I think we've seen a perfect example with Joe Biden. Obviously Trump, he was pumping a lot of oil out at a record amount, and some people agree with it, some people don't. And as soon as Biden come in, I think he felt a lot of pressure to become very eco-friendly and start to become more dependent on electric vehicles. And of course, he slashed the output of crude oil from the US. And now, of course, with what's happened in Russia, I know that Joe Biden couldn't have really predicted what's happened. Yeah. But I feel like that has not helped the market. And of course, that's why we are seeing crude oil at record highs. And I think Germany were very fast to lead the way for Europe in becoming eco-friendly, and they've obviously turned off a lot of their nuclear plants. And they're not like light switches. You can't just turn them on the next day and say, oh, actually we need our nuclear energy back again. And that's why they are in a lot of trouble this winter. And going back to the stock market and whether I do think that this is a bear market rally, again, I think so, because it's going to be a very, very tough winter. I think on our last podcast we were talking about wheat, just how expensive wheat's going to be. But I think just heating your homes this winter, it's going to be incredibly difficult. It's going to be incredibly expensive for families, and those who are already struggling to make ends meet are going to really feel the pinch going into the winter time.
Of course, and that's noted especially in the States as well. With rising inflation, everybody's calling for higher paid salaries, but not a lot of people realise that will have a negative effect on inflation rather than a positive.
Well, I think that's where it takes. With inflation, of course, inflation's not going to stay at the current levels. I think in UK, for example, it was at 9.1% last week. Yeah. It's not going to stay at 9.1%, but it's not going to go back to the levels that it was at last year, for example. No. It's gonna. But on the flip side, wages have gone up. In certain industries. But I think BA actually come out. There was BA staff this week. They've come out and they've now announced a new strike in primetime flying, and that's because BA gave their staff a 10% pay cut during COVID times. And now you all you have to do is go to an airport to see how busy it is. Obviously, us flying out here, it's so busy.
I know we didn't even have the option of getting the train. We normally like to drive anywhere when we go to the airport, just for ease, just in case you forget your passport or you forget something, you've got to go back. But the train strikes are very bad in the UK right now because staff are refusing to work because wages aren't enough in line with inflation. Exactly,
and we're going back to a BA haven't been given that 10% pay cut back, and flights are now pretty much back to pre-pandemic levels. So, I don't blame them. I'd be very angry as well. And, it's just waiting for wages to kind of rise and kind of meet inflation halfway. And, the problem is that it doesn't just happen overnight. It can take a year. It can even take 2 years. It can take even longer. So I think that we are in trouble for, the next 6 to 12 months. I think it's going to be a very hard time to navigate the markets. Mm-hmm. But, again, opportunities like this, volatility like this creates opportunities. And, for someone who's looking to invest, I think this is a fantastic opportunity to take with both hands and put some money to work.
It is for sure. And, with that being said, shall we touch on the next leg of the trip after we're done in New York?
Yeah, so we're off to Miami. So what day is it today? Sunday. So market's open tomorrow. So we're here for a few days. We're doing a bit of filming around Wall Street this week.
So keep an eye on the Instagram and social pages. We'll drop a link to both mine and Max's pages at the end of the podcast. You guys can give us a follow and see what we're up to whilst we're here. But yeah, some very exciting content coming this week. So do keep your eyes peeled and posted. But yeah, Miami, I've got to say, I'm even more excited for than New York, just because I met a really good friend of mine last night. And he said, if there's one other place I could live in America, and I have a bit of a bias here because I am from New York, but he said, Miami is the place. And it's nice that we both had we're going to have a bit of a contrast. New York is very stock market related, etc., commodity indices, whereas a lot of people involved in the crypto space live in Miami. And obviously I'm going to touch base with some good friends and some clients over there whilst I'm over there. But a lot of them, I think the majority of them live there because of the taxes on crypto. They are better
Florida,
than a lot of other states. So yeah, it'd be nice for us both to have that contrast too. But some great content coming from New York and Miami. So definitely keep you guys.
Yeah, I don't want to spoil too much, but we've gone ahead and booked a helicopter tour, and I am very scared of heights. I'm basically shitting myself for the helicopter.
I'll hold your hand, don't worry.
Yeah, you're not too fussed about heights, are you?
No, I mean I went to Maldives not long ago with my fiance, and the seaplane, it was a little bit unstable, but it didn't bother me. When I go and travel, the airport, the plane, it's a big part of it. I enjoy that aspect. It's nice to get on a plane. You can kind of do the same on the seaplane, but turn your phone off for 7-8 hours and get no disturbance. It's lovely. Put your headphones in, watch your film, shut off from the world, and then when you land, you're hoping your portfolio and your trades are looking good. But apart from that, that's good. But no, I'm really looking forward to what's to come with the trip.
Yeah, no, likewise, and I think we've timed it very well as well, because there's a heat wave, which is pretty much hitting Miami. Temperatures expected to go to 35. That's obviously degrees, not Fahrenheit. I don't know what it is in Fahrenheit. I know that most people over here in the US use that as a gauge, but yeah, very excited. I was actually very surprised about how long the flight is between New York and Miami, 3.5 hours.
Yeah.
I thought it'd be like an hour's flight. But again, that just shows how big the US is.
Crazy.
It's very similar to like Australia, because I think if you fly from Sydney, let's say you're flying west, for example, I think even when you're 4 hours into your flight, you're still over Australia. And I think that's, if we were to fly to California, I think that would pretty much be the same outcome. That is, it's just such a large country. I think us
even from walking around New York, I've noticed that.
Exactly. Us living in UK, a flight from London to Scotland is like an hour.
Yeah.
And that's
6
pretty
hours,
much
7
our
hour
country.
drive, max.
Yeah, so very excited to go to Miami. Not looking forward to the flight from Miami back to London. No, that's going to be a long one. Again, I am scared of heights, and I hate the fact that whole flight path is over the sea. So if anything goes wrong midway, God help us. I'll be putting out that life jacket to a good use. I'm not a very good swimmer either. So, but yeah, fingers crossed. Touch wood, nothing. We should be okay. But yeah, I think we should wrap it up for this podcast.
Definitely. There will be, of course, an episode 3, and we'll be filming that and posting that in Miami itself also. So we'll be letting you know what we've got up to, how we found it. Obviously, hopefully the market will give it a little bit more of a clearer idea of where it's heading, whether that be to the upside or the downside by the time that we get that third podcast out. So yeah, keep your eyes peeled and make sure you watch and you tune in.
I am worried about one thing though here, Tyler. This is episode 2. Episode 1, of course, was filmed in London.
Yeah.
This has been filmed in New York. Our third episode is going to be in Miami.
Doing well, right?
When we first, were talking about hosting a podcast, we said we wanted to, only do maybe two a month. At this moment in time, we're only at our second podcast, and we've already gone bloody international. So yeah,
let's keep it moving. Let's keep it interesting. Let's keep it exciting. Hopefully,
we've set the bar high.
We have.
But
we have. And hopefully by the time, we get a little bit more in-depth with things, we can bring some exciting guests on.
100%. But thank you very much for listening to our podcast, and we hope that you've learned something.
Yeah, for sure. And if you've got any questions, any topics you'd like for us to touch on in the next episodes, please do drop a comment down in the video below.
Thank you.
Thanks, guys. Bye.